Hi everyone and welcome to my very first video here in YouTube. Before we start, I would greatly appreciate if you will hit the like and subscribe button in this channel where I will post discussions about accounting and other related topics. If you also have requests, feel free to comment down below. So for this video, I am going to cover the topic about the financial statements. So let us first identify our objectives. So first, we are going to define what a financial statement is, and second, we are going to enumerate and explain the 5 basic financial statements. So let's define what are financial statements. So financial statements are written financial records that convey the business activities and the financial performance of a company. Take note that in accounting, the end product of it would be the preparation and the creation of the financial statements. And these financial statements will be used by different types of users in making rational economic decisions. Now let us enumerate the 5 basic financial statements. Number 1, we have the statement of changes in owner's equity or shareholders' equity. Number 2, we have the statement of comprehensive income. Third, we have the statement of financial position, statement of cash flows, and finally, the notes to financial statements. So we are going to describe this one by one. Let's start with the statement of changes in owner's equity. So in this statement, we'll be able to see how much the owner's equity changes over a period of time. So for example, if the beginning capital is 1,000 or 1 million, let's say, and after the calendar year ends, it became 2 million, then there is a 1 million change in owner's equity, and that can be seen in the statement of changes in owner's equity. The second one is the statement of comprehensive income, where in this statement it shows the financial performance of the company. So here we'll be able to see two basic accounting elements, which are the revenue and expenses. The third one would be the statement of financial position. So the statement of financial position will show to us the position of the company, how much the company owns, how much the company owes, and the net worth of the company. Here, we'll be able to see the other 3 accounting elements, the assets, liabilities, and owner's equity. The fourth one would be the statement of cash flows. The statement of cash flows will show the cash inflows and cash outflows of the entity. And finally, the notes to financial statements will show the different disclosures not presented in the other 4 basic financial statements. Let me present to you the 2 important financial statements, which are the statement of comprehensive income and the statement of financial position. Here, we'll be able to see the 5 accounting elements. We have the assets, the liabilities, the owner's equity, the income, and the expenses. So under the statement of financial position, we are going to see these 3 accounting elements. While in the statement of financial performance, we'll be able to see the other 2 accounting elements. We have the income and we have the expenses. Now, as users of financial statement, what can we see or what can we conclude by simply looking at the financial statements? For the statement of financial position, we will be able to see or we will be able to assess the liquidity, the solvency of the company, the capital structure, the capacity for adaptation. So first is liquidity. We know that liquidity is the ability of the company to pay its currently maturing obligations. So take note, here in the liability section, we'll be able to see the current liabilities and the non-current liabilities. So here, we will be able to see if our assets are capable or is enough in paying our current liabilities. We also can assess the solvency. Solvency refers to the ability of the company to pay for its long-term obligations. So take note that the other component of liability is the non-current liabilities. So by simply looking at it and simply looking at the assets portion, we'll be able to assess whether the company is solvent or not. The third one would be about capital structure. Capital structure refers to how does the company finances the assets. So how much debt it is using, and how much owner's equity is it using or is it investing in financing the assets. That's why the accounting equation is asset is equal to liabilities plus owner's equity, because it's the liabilities and the owner's investment that will finance the acquisition of assets. And finally, we have the capacity for adaptation. This refers to the ability of the entity to change or modify its resource base, whether this is necessitated by changes in economic conditions, new opportunities, or maybe directives from controlling bodies. So for example, if there are opportunities that are present as of the moment, will the company be able to adopt it, or will the company will be able to grab such opportunity? So that is capacity for adaptation. For the statement of financial performance, we'll be able to assess the company's profitability. Profitability refers to the ability of the company to generate earnings. That's why the bottom line for the statement of financial performance would be net income or net loss, which is determinative of how profitable the business is. I have here an example of a consolidated statement of financial position of Jollibee Foods Corporation. So here, as mentioned earlier, we'll be able to see the assets, liabilities, and equity of the company. So for the assets, it's divided into two. We have the current assets and the non-current assets. By the way, this is an actual data of Jollibee Foods Corporation in their published financial statements, right? So just to look at the current assets of Jollibee, so the amounts are in 1,000 pesos. So we add 3 zeros here. So for 2020, they have a current asset of 80 billion, non-current asset of 130 billion, and a total assets of 210.8 billion. For liabilities, current liabilities, we have 58.9 billion, and for non-current liabilities, we have 83.8 billion, total liabilities of 142.778 billion. And for the total equity and liabilities, it should equal to the total assets, which is amounting to 210.8 billion for 2020. So this is how an actual financial statement looks like. So it is just a single page or maximum 2 pages for each financial statement. The next we have here the consolidated statements of comprehensive income. So as earlier said, that in this section we'll be able to see the revenue and the expenses of the company. So that's why the bottom line would be the net income or the net loss. So for 2020, we have a net loss of 12.6 billion and total comprehensive loss is 14.4 billion. So this shows the profitability of the company. Next, we have the statement of changes in equity. So we have here the balances at the beginning, then the balances at the end. So for example, for 2019, the balance is 1.092 billion, and for December 2020, we have 1.1 billion. This is just a continuation of the previous statement. Next, we have the statement of cash flows. So again, this statement shows the inflows and outflows of cash. And there are 3 activities for this cash flow statement. We have the operating activities, we have the investing activities and the financing activities. So we'll be able to see here the cash beginning and the cash end. So for the cash end, we have 21.3 billion for 2020. So this is how a cash flow statement looks like. And finally, the notes to financial statements. So the notes to financial statements will give disclosures as to how we arrive at the different amounts, what accounting standards we follow, what accounting policies we follow, and some other relevant information about the company. So that's why here, for the notes to financial statements, the first portion that you'll be able to see is about the general information of the company, right? And many of the sections in the notes to financial statements would compose about the disclosures of the different account titles on how we arrive such amount. So for example, for inventories, we have here the balance at year end. So this amount will be the amount that will be presented in the summary in our statement of financial position. Another example is for other current assets. So it's amounting to 7.2 billion, and this 7.2 will be seen in our statement of financial position. So if we are going to put all of these in our statement of financial position, then our SFP will be very, very long. So for us to capture the comprehensive or the summary of the statement, we just input there the final amounts for each account title. All right. So I hope we are able to achieve the objectives. Number one, we define what a financial statement is. And number two, we are able to enumerate and explain the five basic financial statements. That would be all for this video, and I hope you learned something about this. Thank you.